Spy Trader Intro. Funny host. Hey there, Spy Traders. It's your favorite market jester, Chuckle Finstein, coming to you live on this bright Tuesday afternoon, August 6th, 2024. The clock just struck noon, and it's time to dive into the latest happenings in the world of the S&P 500. For those of you checking your portfolios more frequently than social media likes, you know who you are. This one's for you. Sound effect. Breaking news. Big news, folks. After 3 downer days that had us all thinking about hiding under our financial blankets, the U.S. stock market rebounded significantly today. The S&P 500 climbed about 2%, recovering nicely from its worst trip-up since 2022. Leading the charge, the energetic tech sector pulled up the Nasdaq Composite by 2.2%, showing everyone that Silicon Valley's still got some moves. Sound effect. Now, I know you've been biting your nails over the recent volatility. The S&P dropping 6% in 3 sessions was no minor hiccup. The VIX, our anxiety gauge, shot up like a toddler on candy, reaching heights not seen since the COVID days. But things are calming down. And hey, if you survived 2020, this is a walk in the park, right? Sound effect. Bell ringing. Let's talk year to date. The S&P 500 is still flexing with an 11% gain despite the recent roller coaster. Major heavyweights like Nvidia, Tesla, Microsoft, and Meta made a strong comeback. For those like me who've been tracking their ups and downs closer than a soap opera, this is a good sign. And check this out. Cryptos are mimicking stocks again. Bitcoin climbed 7%, crossing the $55,000 mark. I guess it's safe to say, stocks or cryptos, trends are the new BFFs. Cash register. Now let's get analytical. The decline was mostly about fears over our good and slightly unpredictable friend, the U.S. economy. But tech pulled a Rocky Balboa on us, proving it can still pack a punch. If you've got tech in your portfolio, this is your moment of zen. Which brings us to the Fed. All eyes are on the Federal Reserve with whispers of a possible 50 basis point rate cut. If this happens, it's bye-bye to tighter monetary policies and hello to cheaper borrowing. This could be your moment to make a strategic move. Sound effect. Drumroll chuckle. Trading recommendations time. All right, folks, given today's bounce back, I'm recommending a focus on tech and defensive sectors. 1. Buy the dip on big tech. Companies like Nvidia, Microsoft, and Meta just regained some lost ground. If the Fed goes easy on rate hikes, tech stocks will likely flourish. Time to gobble up those shares. Reasoning. These companies have solid fundamentals and make up a significant chunk of the S&P 500. Their rebound signals a broader market recovery. 2. Consider utilities for dividend hunters. If volatility scares you more than a Monday morning commute, utilities offer steady dividends around 3.1%. Reasoning. With interest rates potentially dropping, utilities' high dividend yields become even more attractive compared to bonds and savings accounts. 3. Diversify with a sprinkle of crypto. Bitcoin's rise signals confidence. For those who like to live on the edge, a small percentage in cryptos might add an exciting twist to your portfolio. Reasoning. The correlation between stocks and cryptos suggests that market recovery could buoy crypto values as well. And remember the golden trading principle. How does a stockbroker like his eggs? Divest eggstead. So yes, keep calm and trade on. Exit music chuckle. That's all for this episode, dear listeners. Remember, the market's a marathon, not a sprint. Stay informed, stay invested, and join me again in a few hours for more market antics and insights. This is Chuckle Finstein, signing off from Spy Trader. Happy trading. End with signature tune.